Hello, I'm Tony Kaye, I'm the editor of Eureka Report. Welcome to Property Point today, and I'm joined as always by Nerida Conisbee, Chief Economist of REA Group.
Thanks for having me.
Yeah, thanks for coming in, Nerida. Now, today, just really a wrap up of what's happening in the marketplace for investors. Still strong conditions.
Yeah, look, really strong conditions. We thought things were slowing down at the end of 2016, but it seems like investors are back, home buyers are back, and particularly Melbourne and Sydney, we're really setting ourselves up again for a pretty strong price growth year. Very different in WA. WA continues to see very low demand on our site, low demand from buyers and also from renters. We've seen a couple of months where things seem to have been improving, but overall it does remain pretty subdued over there.
One thing I have noticed is just looking around my own neighbourhood, there seems to be quite a lot of Chinese buyers still in the marketplace. And then I was told over the last weekend that in Melbourne there was a major housing conference going on, particularly focused on the Chinese buyers. So that part of the market, particularly in Melbourne, I suppose in Sydney, hasn't really disappeared.
No, look, Chinese love Melbourne. We see twice as many visitors Chinese-based property seekers looking at Melbourne than we see than Sydney, for example. So Sydney ranks number 2, but twice as many looking at Melbourne. We saw an increase of around 3% year to date in the number of Chinese-based property seekers. When we have a look at where they're looking, it's very much Melbourne, Sydney, but Hobart has seen quite a big increase as well. So Hobart's off a very low base, but it does seem to be following that that tourism trend. And I've seen a lot of Chinese tourists to Tasmania, and now they're starting to look to see if they can buy anything. Not much to buy there, so not much new stock, so that'll probably be something that really puts a cap on that. But it has been interesting to see their behaviour on site. Yeah,
I've noticed that Hobart has been enjoying pretty strong growth.
Yeah, I would love to see some of the jobs growth numbers coming through in Hobart. We're just seeing really strong demand from people looking to buy, but also very strong demand from people looking to rent. So, if it was just buyers, I'd think perhaps it was mainly speculative buyers looking in that market because it's so cheap. But the number of renters seems to be increasing as well. So yeah, I'm really curious. There's nothing. The problem with the data that we get through, it's very real time, and so when you have a look at jobs data, the lag is quite significant by the time we start to get some accurate information there. So at the moment, it looks like Tasmania is booming according to home buyer and rental activity.
And of course, in the stronger markets, rental yields are being squeezed.
Yeah, on the back of price growth. So price growth, if you have a look in Sydney, 16% last year, Melbourne, 12, 14% last year. With that strong price growth and pretty much minimal rental growth, it's no surprise that we're seeing yields compressing.
So that's obviously a negative for investors, isn't it, if their returns are shrinking?
Yeah, look, it depends what sort of investor you are. I think most people buying in Melbourne and Sydney are buying for capital growth. They're not buying for rental yield. You wouldn't be buying for rental yield at 2-3% particularly.
That's right.
So I think it's capital growth that a lot are looking for. Really good rental yields are available in regional areas, but you do need to be a type of investor that doesn't expect any capital growth. So if you're after more of a monthly rental check, regional areas are better, but regional areas are a little bit higher risk as well, that prices can actually go backwards. So we do find most investors look for capital growth, and Melbourne and Sydney does attract the most investors as a result.
And what's happening up in Queensland and what's happening over in Perth? Is Perth turning around?
Yeah, Perth. Perth is interesting. It's not turning around at the moment. I think it's still pretty much at the bottom. We're seeing some price growth in very high demand suburbs. So, the Peppermint Grove type suburbs, very, inner west, very premium suburbs. So they're seeing in excess of 10% growth. So they're kind of seeing levels of price growth similar to what we see in some suburbs in Sydney and Melbourne. We're seeing strong rental demand for beachside suburbs. So City Beach, for example, is seeing pretty high rental demand. So, there's pockets that are doing well. And I think in any market that you look at, to say all of Perth is not a great market is incorrect, that there are pockets that are doing pretty well at the moment.
Yeah.
Queensland, Queensland's interesting. Gold Coast is just exceptional at the moment in terms of rental demand and also buyer demand. Gold Coast has a tendency to overbuild, so we're watching that pretty closely to see, the level of construction taking place. But at the moment, it is a boom city, and it's really showing up on our site.
Over the years, obviously Gold Coast has been up and down, up and down. So what's driving this latest attention to the Gold Coast?
Yeah, I think it's partly because the Commonwealth Games have got the new light rail.
Yeah.
I do think, though, a lot of people who are looking to live there are possibly working in Brisbane, so maybe more of it's becoming more of a commuter suburb. But also that economy does seem to be back, and it'd be interesting to see how it goes over the next couple of years. But given that there's very high demand from renters, I think a lot of young people are going there, and the affordability options are pretty high. So there's a lot available for them. So I think that's attractive for a lot of people.
Heading up to Darwin, that's a fairly weak market, isn't it?
Yeah, look, mining towns are still doing pretty badly. I think a lot of the price drops have stopped, and so if you were very if you didn't mind a lot of risk, now would probably be a time to start looking at those markets. The rents haven't dropped by the same extent. So actually the rental yields, if you bought now, would actually be quite good. But, I think a lot of people got quite burnt buying in mining towns. So you do need to be pretty careful because, when you look at capital growth long term, it tends to do better in mixed economies where you've got, not just mining, but government and financial services and, lots of things happening. Mining towns are very dependent on maybe one or two mines, and, it can be quite risky as a result.
Oh, thanks, Nerida.
Thanks for having me.
When we catch up next time, we can just have another bit of a wrap up on what's happening around Australia and on the investment scene. Not much seems to be changing, but I'm sure we'll have more to talk about next time.
Sounds good.
I'm Tony Kaye. I'm the editor of your REA Report. Thanks for joining Property Point.
InvestSMART's separately managed account benefit number 7. It's not a pooled investment. Pooled investments like managed funds can disadvantage the long-term investor who is happy to ride out the volatility of the market. Managed fund investors' performance can be negatively impacted by herd mentality of people putting cash into and taking it out of the market at the wrong time. In a separately managed account, there is no herd, just you.